Hey, 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 Happy New Year, everybody. And I wanted to just come on in here and share the $8 a day um, challenge that I decided to give myself. And a lot of people were interested in doing this as well. So basically, my strategy I started December 31st, 2024, just because I wanted to jump on the new year, and started putting $8 per day into the stock market, and specifically $8 a day into two ETFs, so exchange traded funds. It's kind of like buying, in the old days, they were mutual funds, then they became index funds, and now they're these ETFs. These will be funds that track a specific sector or market. And I decided to go with VOO, which is the one that tracks the S&P 500. It is made by Vanguard. They are very well known for creating like index funds and now lots of ETFs. And then the other one I'm deciding to invest in is VGT, which is also Vanguard, and that's their technology fund that tracks the NASDAQ. Only the tech stocks of the NASDAQ. So that's the other one. Why two and why $8? I've watched a lot of videos that were $5 a day and on YouTube, and they're like, yeah, I put $5 a day in the market. And I'm like, that's great, but you figure you're losing 2 days a week for the weekends. The market's not open on the weekends, right? So you're losing those 2 days. And somebody did the math, and it was like an average year, it was something like, I forget how many trading days, but if you instead did like $7.30 a day, then you would make up for those lost days and also holidays. And so I just decided to round up to 8 because I don't think you can buy pennies towards the stock market anyway. So $8 a day. So how do you do that when some of these stocks or ETFs are hundreds of dollars, right, for one share? Most brokerages now will let you purchase what is called fractional shares. Schwab calls it stock slices. Everybody kind of has their own name for it, but most of them will let you switch. When you go to the buy section on your trading screen, it'll have an option usually for shares or dollars. So you want to select dollars if you want to do this. And unfortunately, I use Fidelity, and they do not have an option to do this on a recurring basis daily. It's only weekly, bi-weekly, and monthly. I think that's kind of a weak point on their system. I've got other issues with them, but yeah. So I manually have been doing it, just popping in $8, for each one, buying them every day, pretty much around the same time. I also have it set up on a calendar alert, so I always remember to go in there every weekday, buy the fractionals, and make sure that I did it for the day. So, what's the goal here? Especially when the market is like, let's take a dive. Why put money in? Well, based on my own experiences, dollar cost averaging has just been the name of the game for me and for the portfolio I've built up. Started with a 401k when I was in my early 20s, and I didn't even know what it was worth until I switched jobs like a year and some later, and then was like, oh, I gotta transfer the money. And it was just like, well, I can't touch it. I'm just gonna open another account. And so, through different jobs, I just rolled it over. And then in 2015, I became an entrepreneur, and I had to end the 401k and recreate an individual retirement account or IRA. Because if you're not employed, you can't have a 401k. So I just kept doing this idea of dollar cost averaging, and basically you just putting money in consistently. Like, doesn't matter whether the market's up, the market's down, you don't feel like it, whatever, just being consistent. Before, the automatic nature was really easy because I just told my employers, hey, take X% out of my check every 2 weeks, and the money was gone before even the taxes. So, when I go to retire and take money out, yes, I will pay taxes on the traditional IRA that I have, but I was more interested in having the money grow versus pay taxes up front and having less money. So If anybody's wondering about traditional versus Roth, that's my perspective on that. But yeah, if you want to join the challenge, no sign up, nothing needed. I just wanted to share it on social media because I felt like people were, asking me a lot of questions. I've been doing a lot of active trading, both day trading, swing trading, and long-term investments. I've been investing in the stock market since technically 2006, 2005, but I didn't become any kind of active trader until about 2012. And there was years in between then and now where I wasn't active, but I did dollar cost average. And my biggest regret is just not doing it more and more consistently. So yeah, basically I look at it as most people have $8 a day that you probably are spending on junk food, eating out instead of brown bagging it. You eat out more often on the weekends than you should. You spend more on booze than you should. You go out to the movies, whatever. Like there's $8 everybody can come up with on a daily basis. And I think also with inflation, it makes more sense to do $8 a day than $5 a day. Because, some of the videos I watched on YouTube, they were years old and they're talking about $5 a day. And I'm like, yeah, that's okay. But $8 is almost double and it's going to go a little farther, making up for the inflation. So yeah, just do yourself a favor. If you are completely brand new to investing and maybe you have a 401k or an IRA, but you don't even know how to get in there and you don't know how to buy anything, my advice to you is open a brand new account through whatever firm you already have, or you can go with a different one. My favorites are Fidelity and Schwab. I just found it easiest to do the fractional shares through Fidelity. Schwab, I could not purchase fractional shares of ETFs, at least not the Vanguard ones. So that's why I chose Fidelity. And you just go in there, it's going to ask you a few questions, you put in your info, you want to open, this is what I recommend, you want to open a individual trading account, taxable, some people call it IBA, individual brokerage account. This is not a retirement account. This is just a regular account you can trade stocks in. Kind of the purpose behind it for why I say open a new one is one, so you can track what actually happens just with buying your $8 a day. It doesn't get muddled up in your other investments, just this challenge, right? Two, you can take the money out, you can sell your shares at any time, and you don't get penalized. It's not a retirement account where if you withdraw it early, then you get penalized with the 10% tax on top of the tax, really, for the US. So yeah, just make sure new account, if you want to join, set it separately from your other investments. And I know for my research, I looked at Fidelity and I was like, well, I already have several accounts. How many can I open? Apparently you can open unlimited. So if you already have a couple of accounts somewhere and you're nervous about that, it doesn't matter. And you can easily transfer cash from account to account. You can transfer it from a bank account. They'll just link your bank account to your trading account. And usually within a couple of minutes, you can have that account funded and start purchasing. So once you have your account set up, connected to your bank or to another trading account, put the money in there. I'd say if you're doing the $8 challenge, put about $150 or so in there, so that way you've got like a month's worth of cash in there to buy it daily. And then just make sure that you set it up every day. Set a reminder, go in there, hit the trade button, put in your stock or ETF that you want to buy. If anybody has questions of what I recommend, my top 3, I'm going to put it in the comments right now. So number 1, VOO, which is the S&P 500 ETF, VGT, which is the NASDAQ 100 tech-only stocks. So a little more volatile, a little more chance of your money going down, but we're in it for the long run here. And then number 3, I would recommend if you want dividends, which you will get dividends on all 3, but the biggest payout of dividends is SCHD, which I'm also plugging in here. And of the 3 ETFs I just listed, SCHD is the cheapest at like $27 and some change. So that one, if you just are like, oh, well, I want to buy more shares faster, by all means, you can do that. Just keep in mind, like, even though you're buying $8 a day, and VU is like 530, and VGT is like 620 or whatever, that you're still owning pieces of those ETFs. You're still going to get paid dividends, even owning fractional. So it doesn't really matter which of these you decide to invest in, or you pick some other stock, whatever floats your boat, but just do it, and do it every trading day. We want to spread it out. That's the other thing. Some people say, well, I might just do it weekly. That's fine. That's totally cool as long as you're consistent. I just chose to do it daily because every day I'm going to get a different price for my share or for my portion. And that's cool in the sense of like you're always going to be getting, a range of when you buy in. So sometimes you're getting it for cheap, and sometimes you're paying a little more. And at however long it takes you decide to keep your account open, you got all these different price points. And usually, historically, all of these things have gone up over time. Yes, there's market dips, there's market crashes, there's booms, there's bull runs and bear markets, but over time, we're talking 1, 2, 3, 5, 10 plus years, your stuff's going to go up. Okay, you're going to just be like, I'm so proud of myself for doing this consistently. When you see that extra money, even just if this turns out 2025 is not looking as doom much as it is right now, if it actually kind of turns around, then you could potentially see profits at the end of the year. I'm not saying that you will, but who knows, right? So feel free to ask any questions down below, and I'll see you next time.